have just completed, I believe, an acquisition deal. What comes after this? What are your sort of sales growth and target volumes for this year now that that's done, out of the way?
Hi, Heidi. Morning. Thanks for having me. Yes, that's right. We've just come out of a three-way merger, in fact, where we took over Sinochem's global natural rubber franchise. This was a three-way deal because it involved a Singapore listco that they had a controlling interest in called GMG Global, that we were successful in delisting toward the end of last year, as well as taking over their China-based and Malaysian-based unlisted assets that, together with the legacy business of Halcyon Agri, has now created what we consider to be the world's leading franchise for natural rubber. What's next? Well, that's the question that obviously keeps me up at night. Yeah, so what's next for us is really to maintain momentum. Over the last 7 years, we've initiated a massive wave of consolidation in the industry. I think we've doubled our business 4 times over the last 4.5 years, and the challenge is to do that again in the next sort of year and a half, and or maybe 2 years, and that would then get us to a market share globally approaching 20%, which of course is very important as far as consolidation targets go, in order to redetermine the way the rubber price is determined on a daily basis, and to indeed combat volatility.
So is that what you see as being the right size business?
Well, the right size business for an industry as relevant as natural rubber is the size that allows market participants to have fair remuneration on their activity. Okay, so rubber started life as a commodity. As vehicle standards and indeed health and safety standards have moved up and consumer interest groups have formed, it is now no longer just a question of price or lowest acceptable quality. It's a question of sustainability, and it's a question of health and safety. So as the rubber industry progresses into a true industrial raw material, which is a key ingredient to key consumer goods such as mobility, health and safety, we need to recognize that the value chain in the natural rubber industry needs to be adequately remunerated. And that means investment needs to be stimulated. That means returns need to be such that people participate. And with the current volatility, which in fact comes from the Shanghainese market, which at least over the last, I would say, year or so, has completely decoupled from fundamentals, this volatility keeps investment out, and that is what creates a lot of problems for the industry. So the answer to your question, how far we have to consolidate, is, well, somebody has to change the game in the sense that we find a new way to price the product such that we can build something out of this industry that goes beyond daily speculation.
Well, I mean, the daily speculation, you know, that retail element of Chinese markets, it is just what it is, right? It's a quality, it's a very peculiar quality when it comes to what goes on in China. How do you deal with that volatility in terms of how do you gauge, you know, investment and being able to make that somehow predictable?
Well, I mean, what we look at is we try and see what the real cost of rubber is, okay? And the cost of rubber ultimately is determined by various components. You can see the agricultural cost, you can see the industrial cost of processing it, and then finally the distribution cost and perhaps some financing and so on. So if we look at the real cost of rubber, we come to a fundamental sort of S&D determined price that doesn't need to fluctuate 3, 4, 5% daily as it does at the moment in Shanghai. And we also don't need to trade 30 million tons, which is well, almost 3 times the annual crop in the last 4 trading days or last 5 trading days. So there seems to be a distortion. And indeed, there seems to be a divergence of trends where the forward markets are becoming ever more speculative, which I have no problem with. The issue that I have is that the price which is determined on these forward markets should not be used to price the fundamental physical good that we supply to our customers, for whom this is a non-substitutable resource without which you cannot make a tire, a condom, or other health and safety products that indeed rubber makes.